Spring is traditionally the start of the busiest time of the year in the real estate market, but will persistently high mortgage rates and uncertainty about home prices put a damper on this year's market? Now, if you've been considering buying or selling a home this year, then I invite you to stay tuned because in this real estate market update for March 2024, I'm going to share the latest data and expert predictions, compare the national trends to what's going on here in Frisco, and let you know if the foreclosures we've been hearing about for the last few years are any closer to hitting the market. So let's dive into all of that right now. So today we're going to start by diving in and looking at mortgage rates first, as it could be argued that mortgage rates are the biggest driver of activity in the real estate market today for both buyers and sellers. Now, as you know, we've been in a high mortgage rate environment for the past couple of years now, and everyone seems to have come to the realization that those 3% mortgage rates we were enjoying, they aren't coming back anytime soon, if ever, to be honest with you. And the current market is actually responding more to changes in the rate than the overall rate. 7% seems to be a bit of a benchmark rate right now. When rates creep above 7, we see mortgage activity, buyer activity drop off. When rates go below 7, we start to see those mortgage applications pick up once again. Now, one important fact to point out is that mortgage rates are closely tied to inflation. So if you want to know what's going on with mortgage rates, it's best to keep an eye on inflation. And as inflation dropped last year, we saw the mortgage rates follow. And based on how things were going, or based upon how things looked that they were going, the expectation was that the Fed would cut interest rates up to 6 times in 2024. And as a result, that caused quite a uptick, if you like, in the bond markets, and we saw the positive impact in mortgage rates overall. But last October, the downward trend of inflation seemed to pause at about 3%. Now, keep in mind, the Fed's target rate is 2%. You add that in with the fact that there was some pretty strong economic data in recent weeks, especially around the labor market, and we saw that mortgage rates started to tick up once again. And to be honest with you, the Feds are walking a bit of a tightrope right now in figuring out what to do. And it looks as though they're trying to make sure that we don't have a repeat of what happened in the 1970s. And what I mean by that is if you look at this chart right here, you can see here where it's circled on the left-hand side, inflation spiked in the early 70s, and then inflation came down, and the Fed started aggressively cutting rates. And what happened as they did that is you had that second spike in inflation. And that's exactly what they don't want to happen this time. So as you can see on the far right side today, we've had the run up of inflation. We've seen inflation come down. It's kind of paused a little bit right there. And now you've got the Fed trying to figure out exactly what to do. Now, the challenge is if they wait too long, as Mark Zandi points out, that can also have negative impacts as you increase the chances of a recession. So Mark Zandi says policymakers now risk committing another policy error, this time by waiting too long to begin cutting the interest rates. It is unclear why Fed officials feel it necessary to take this risk. After all, they have all but achieved their dual mandate of full employment in the economy and low, stable inflation. So what Mark's pointing out is inflation is low and stable right now, but it's holding right around 3%, not the 2 that the Fed is after. And the employment numbers are strong. We've got near record low employment and have had that for quite a while. Now, we know that mortgage rates impact buyers and their ability to pay, but as Selma Hepp, who is the chief economist at CoreLogic, points out, Mortgage rates also impact sellers. And she says, as mortgage rates continue to hover in the 7% range, it will be difficult to convince existing homeowners to move at the current time. And what she's really referring to there is something that we've been calling the lock-in effect. I've done a few videos on the lock-in effect, and it's basically saying if you've got a homeowner that is locked in at 3% or thereabout, unless they absolutely have to sell, why are they going to and trade that mortgage for one at 7%? And I think one additional thing to point out with this is that she is absolutely correct. But as the longer we stay in a higher rate environment, if rates come down just a little bit, I think you're going to start to see some sellers start to make that move anyway, due to the fact that life can't wait for mortgage rates. The expectation that rates will come down is there. And, if the family's growing and you need more space, you need more space. And there's a lot of people that are going to figure out ways to make that happen. Now, all that being said, mortgage rates are expected to fall this year. As a matter of fact, here is the latest update from Fannie Mae, which they just released in February, that shows they're expecting an average of about 6.5% in the first quarter. That may be just a little bit on the low side based upon what's been happening lately. But if you look towards the end of this year, Q3, Q4, they're forecasting rates right around or just under 6%. If you've been considering buying or selling a home at any point in time, I invite you to reach out. My number is up on the screen now, or alternatively, in the description below, there's a link to my calendar. Go ahead, book a call, and I'd love to talk to you about what your plans are, give you more information about what's going on in the current market in order to provide the information that you need to make the best decision for you and your family. Now, although home prices are ultimately determined by supply and demand, both supply and demand sides of the equation are impacted by mortgage rates, as I just showed. Now, if we go back to when rates started climbing in 2022, the initial belief as those mortgage rates rose was that buyer demand would absolutely plummet and supply would increase. Therefore, we'd have a housing market crash in 2023. I'm sure you remember the headlines were everywhere, the videos were everywhere, the forecasts were everywhere, the prices were going to absolutely crash. The market was doomed, it was going to implode, etc. Well, we now all know that that never happened. It just didn't materialize. And it's not because buyer demand didn't drop off and fall as mortgage rates rose. It did. Home sales were way, way down. But supply also fell, which wasn't really expected. That's that lock-in effect that I was just referring to. Nobody predicted that sellers would simply just say, we're not selling. And as a result, supply plummeted with demand. It kind of lagged behind a few months, but it did come down. And essentially, that kept supply and demand in check, in balance, if you like, and you didn't see the massive drop off in prices that were expected. If we go back and look at what did happen to home prices in 2023, they went up on average by about 5.5% nationally. Now, at the bottom of this chart, Freddie Mac and FHFA calculate home price growth slightly differently. There's some seasonal adjusting that one does, that the other does, which is why their numbers are just a little bit higher than what Case-Shiller and CoreLogic and Black Knight had to say. But in general, about 5.5% appreciation occurred in 2023. But that's not to say that home prices weren't impacted by rising mortgage rates. They absolutely were. And let me show you what I mean. All right, what we're looking at here is the pricing trend graph for the past 3 years here in Frisco. And what I want to point out is, we had a run up in prices. As we know, prices peaked right here in April of 2022. We actually did have a pricing correction. It happened between April and October of 22. That is the time that we start to see pricing come down as a result of what was going on with mortgage rates and the buyer activity dropping back. But to be honest with you, since that time, these numbers are calculated monthly, so there's a lot of volatility in them depending on the mix of homes that's sold in any given month. Essentially, if we drew a straight line through there, we're pretty flat. In essence, home prices here in Frisco have been treading water. They aren't really going anywhere. They're up 1 month, down 1 month, but they're just kind of treading water. Officially, from February, we're up 3.6%. That is from where we were a year ago at this time. And right now, based on everything that we're seeing, it doesn't look as though we're going to see runaway prices. It doesn't look as though we're going to see prices decline. I can tell you that there is absolutely a lot of activity in the marketplace right now, and I expect that is going to continue, and we will see continued growth here in Frisco over the next several years. Now, going forward, the latest pricing forecast for the rest of this year, 2024, nationally were just released on February 26th. And all of the major indexes are forecasting price appreciation. You can see Goldman Sachs here are the most aggressive, forecasting 5.5% year over year. NAR is the least optimistic, forecasting only 1.4% price appreciation. But if you average all 7 of these together, you end up with 3.2% year over year, which is normal, healthy, consistent appreciation. And to be honest with you, not only are the experts now forecasting that prices are going to appreciate in 2024, they've now changed that, and they're expecting that home prices are going to continue to increase all the way through 2028. And that is from the Home Price Expectation Survey, which is a quarterly survey of the 100 leading market and industry experts with regards to economists, your Goldman Sachs, all of them. You compile all of that data together, and this is what it says. So this is as of Q1 2024. So you can see 3.7% this year, 3.36 next, up into the fours. This is going to play out a little bit different across all areas of the country, but it looks as though what they're forecasting is in line with what I'm expecting to see again here in Frisco. And let me show you why. All right, so what I'm looking at right here, this is from my weekly market report. If you'd like to get a copy of this weekly market report, in the description below, I've got a link to this actual report. If you're not interested specifically in Frisco, maybe you want Prosper, Salina, Aubrey, anywhere else in the area, you can do that. Right at the top of this report, there is a search bar. You can put any city or zip code actually in the entire country in there, and you can get this exact same data. So what we're looking at right here, we're going back to mid-December, and this right here is showing the trend line of where prices are. Yes, this is list price and not sold price, but I did that on purpose. And I want to point out that nobody puts their home on the market, not that many, at least right now, without an intention to actually sell. And if they want to sell it, they're pricing it to sell it. So there's 2 pieces of information right here that I'm working together with, and let me show you that. So as you can see, this solid line is the 90-day trend, and it's just consistent. We're seeing an uptick in prices. The dash line is weekly. It's updated every 7 days. So again, it's going to have more ups and downs, peaks and valleys, as you never know what mix of homes are going to get listed for sale from one week to the next. But the bottom line is, if you look at it, the 7-day trend on list prices in Frisco is at $766,985, and it's consistently going up. All right, we are seeing an increase in those list prices. Now, when I flip this over and look at properties that have had price decreases, this is a really good leading indicator. So think about it. You put your home on the market, it hasn't sold. What are you going to do? You're going to reduce the price. Now, the less homes on the market that have a price reduction indicates strength of market. If you're not having to reduce the price in order to sell the home to get it under contract, that's telling you that there's plenty of buyers out there. And that's what we're seeing. So again, going back to mid-December, you can see that, just over half of all homes were having to take a price reduction in order to go under contract. In the winter, that's not uncommon. But as you can see, that has just been falling. It's coming down. If we look at our 7-day average here, we're down to 33% of homes taking a price cut. And somewhere between 30 and 35% is actually the norm. That's what you expect to see in all markets. So right now, everything in Frisco is trending in the right direction. So again, if we go and look at one last piece here, we're going to look at inventory. And again, for the same time, inventory equals supply. We're starting to see a tick up in price in the number of homes for sale. That's good news, but it's not running away like crazy. If I reset this and go all the way back to 2019, you can see, even though we've seen an uptick in inventory over the past week, or the past month, I should say, we're still nowhere near where we are historically for the number of homes normally on the market. The only way that home prices are going to fall going forward is if we see a rapid increase in supply. Now, a lot of the headlines have been talking about supply and the number of homes for sales up, but I just showed you on the Frisco inventory, it's up, but it's not up relative to where we were pre-pandemic, for instance, or you go back a little bit further than that, we're still way, way lower. So where is that potential supply going to come from? And you may recall, there's been a lot of talk from the pandemic on that, oh my gosh, foreclosures are coming. Foreclosures are coming. We're going to be inundated with foreclosures. But that's just simply not true. There is zero data to back that up. There are very few foreclosure filings compared to where we normally are historically. So right here, what we're looking at is over the past 5 years, there are actually 1.45 million fewer foreclosure filings than what we would see in a normal year. And I don't see, or in a normal time period like this, and I don't see that changing. And one of the reasons I don't see that changing is because of the fact that we are equity rich. Homeowners are equity rich in this country right now. As a matter of fact, 38.7% of all homes are owned free and clear. There's no mortgage on them at all. Of those with a mortgage, 28.7% have greater than 50% equity. And only a third of the mortgaged homes have less than 50% equity. So if you think about that, what does that mean? Well, if a homeowner truly found themselves in trouble, if they lost a job, there's a medical situation, something going on, and they had to sell, they're not going to walk away from all that equity. There's plenty of activity in the market. They're simply going to put that home up for sale, be able to sell it traditionally, and they're going to be able to walk away with equity money in their pocket and move on into the next property that they are going to be getting, whether that's a smaller home that they're able to buy outright or moving into a rental property. So overall, we're not necessarily seeing the bulk of the activity yet that we would see in the spring. It seems to be a little bit lagged. That's kind of been evident the last couple of years. But I can tell you, there's plenty of people out in the marketplace looking. I've spent time at new construction sites over the past couple of weeks, and they have been packed. The sales offices are packed. There's tons and tons of people out looking. And if that's you, if you've been considering buying or selling a home at any point in time, I invite you to reach out. My number is up on the screen now, or alternatively, in the description below, there's a link to my calendar. Go ahead, book a call, and I'd love to talk to you about what your plans are, give you more information about what's going on in the current market in order to provide the information that you need to make the best decision for you and your family. And as always, I hope that you found value in this video today. If you have, I invite you to go ahead, click that thumbs up, and subscribe to this channel as I release new videos like this each and every week to keep you updated on what is going on in the Frisco marketplace. And I invite you to stay tuned and watch one of these videos coming up next.